What's the biggest threat to today's housing market?
Welcome to your Money Monday.
Welcome to session 277. So, great quote from Ali Wolf, who is the chief economist of all things housing, labor market enthusiast, and you can find her on YouTube, Bloomberg, just everywhere. And she is really a great chief economist for Zonda and actually goes really granular into examining the market. Great gal, you got to check her out. So this is what she says. Well, first of all, I got to tell you this. She says about the slowdown of the housing market. Some people are saying, whoa, it's slowing down. She goes, yeah, the housing market has slowed down a little bit. It went from 150 miles an hour to about 120 miles an hour. So she's saying it's not really just barely slowing down, just a titch. So that's a great analogy there. So what Ali says is the single biggest risk to housing is rising mortgage rates. And it's a real possibility in the next year that it could bring prices down a little bit. Further, other economic, financial, and confidence challenges could also result in a drop or a flattening of home prices. So, but a drop of flattening in home prices is a far cry from the Great Recession of 2008. So no worries, nothing like that's going to happen, and it's not like great deals are going to be out there right away. It's basically what she's saying. If you take a look at mortgage rates right now, they've been hovering at 2.86 for quite a while now, a couple months, and mortgage rates projections from Freddie Mac, Fannie Mae, Mortgage Bankers Association, and National Association of Realtors, the average of all four by the end of the fourth quarter are saying they're going to be at about 3.2%. So you're looking at an increase in interest rates. And then by the third quarter of 2022, the same resources, the same national resources are saying they could go up to 3.6% there. So you got to keep our eyes on that. What will that do to buyers, and what will that do to the cost of buying real estate? Let's take a look. So today, if you bought a home for $200,000 and you got a 2.86% rate, it'd be $828.18. And if you waited till the fourth quarter of 2021 and rates were like 3.2%, that same payment would be $881.37, the same mortgage amount. Actually, about $3,000 more because the home's going to go up in a quarter by about $3,800. So $881. So then that's a difference of $53.19 in a mortgage payment, and a difference over a 30-year loan would be about $19,148. So that shows you that the cost, boom, is going up, and it's going to hurt consumers' wallet about $54 a month. And then if you look at today, that $828 payment compared to, say, the fourth quarter of 2022, and the rate goes up to 3.6%, then you're going to be at $944 for a payment, which is a difference of $115, call it $116 right there, which over a 30-year loan then is $41,700 and some change, okay? So you can see that big differential of how mortgage rates will affect the consumer's pocket and probably maybe slow things down just a titch more. And then the realtor that you're working with, you got to really think about this. They need to show you where your purchasing power is going to adjust if rates go up. So right here is an example. If you're buying a $240,000 home and you get a 3% interest rate, then your payment's going to be about $1,012 right there. But if all of a sudden they jump up to like 3.75%, then you're going to be at your $1,000 payment, your $1,019 payment then is only going to get you a $220,000 home right there. So boom, you lost $20,000 in buying power right there by interest rates going up. So that shows you a lot. But never fear, compared to the past history, take a look at this. Home mortgage rates by decade. Okay, in the 70s, they are 8.86%. In the 80s, they are 12.7% average. In the 90s, they were actually 8.12% average. And in the 2000s, they were like 6.29%. And then in 2010s, they were doing 4.09%, okay, as an average for all those decades. So check out those decades of interest rates there, much higher than they are today. Today, if we're at like 2.8% and we're going to be at 3.6% by the end of 2022, we're still way better than those past decades. So, you know, still take advantage. There's no more incentive than ever to make a move in today's market with these interest rates being like this. So take advantage of them. It's a great time to buy and sell still, and check it out, okay? I hope you like this video. The most important thing that you can do is take action and share with everyone this important data about the cost of housing and the biggest threat to housing slowing down a little bit, okay? I'm Rich Motz, and I will see you next Monday. Have a great day, everyone.